Hello everyone, good morning. Welcome to today's webinar. It's on business recovery planning. My name's Nick van der Wire and I'm the Marketing and Business Development Officer at Davis Grant, and I'll be moderating today. So for those of you who are unfamiliar with webinars, I'm sure we all are these days with lockdown. I'm sure we can't move for these things. Let's familiarize ourselves with the Zoom environment. So in there at the bottom, you can click on your audio settings to check and test your speakers. So if you're struggling to hear me or you want to turn things up or change the output, that's where you would go. Please submit any questions that come up throughout the session via the Q&A button, which is there at the bottom. And we will have time to answer your questions at the end of the webinar. If you need to leave at any time, please just click leave meeting. There may be a short survey to fill in just to say how you felt about the webinar. Please do take the time. Thank you. So now I'd like to introduce today's presenter. Our presenter is a fellow of both the Association of Chartered Certified Accountants and the Institute of Chartered Accountants in England and Wales. His principle is that focusing on your goals blended with a foundation of strong accounting and tax expertise makes the difference between the success and failure of your business and personal ambitions. His approach is holistic. By really getting to know you from the base level up, he tailors his advice to unlock opportunities and help you get to where you need to be. His skills, built up over decades in practice, help clients ranging from £100 million turnover groups to small family-run businesses and tech companies, all of them getting their numbers working for them. Please join me in welcoming Neil Driver.
Thank you very much, Nick. Appreciate that. Thanks for the introductions and welcome everybody to today's presentation. I thought I'd start off with a little thought for you. It's an African proverb saying that smooth seas don't make skillful sailors. So what I really want to tap into here is that business is relatively easy when times are good, but not necessarily right now. Navigating the smooth seas and smooth business in better times is easier to do, but sadly I feel that the rough and turbulent times due to COVID in particular are yet to hit, and some of the announcements made yesterday in terms of government borrowing and the effect on the economy kind of underpin that. Business people use what they've learned in the past and basic intuition to navigate through turbulent and difficult times, but that isn't always enough. So today I want to offer some key learning points that will help you and your businesses through these difficult and challenging times we're in now and likely to face in the coming years. We all need to put into place new processes and learn new skills to survive these difficult times and thrive going forward. And what I'd like to share with you when you get to the end of it, hopefully you'll appreciate, is actually just really good business sense and business practice. It's kind of business planning plus in a different way of looking at it. And this is really what I want to be sharing with you. So before we get stuck in, I'd just like to say that here's the agenda. So I just want to talk about closing the disconnect. I'll explain more about each of these as we go through it. The need to reinvent businesses. And then we'll look at budgets, both personal and business. And then tying on from there, considering what opportunities or vulnerabilities there are in the businesses and trying to come up with a process to share with you to look at your critical challenges, along with various risks and looking at them. And once that's done, it's always necessary to have the goals set out with actions and delivery points. We'll be looking at that. And then I'll show you a complete package of how a full plan looks at the end. You should have had your books and scripts downloaded with the slides from today. If you haven't already done that, please do so. Make as many notes as you can. And of course, as Nick said, please put questions up on the question and answer section. Let's crack on. So before we really get started, I just want to share some thoughts on how we can get better connected at this time. I'm not talking about how we can be better connected with technology, things like these webinars and online meetings, although these are important, really coming from the perspective of how you can work together more effectively. We can work together more effectively now and in the future, where your expertise in your businesses can be combined with ours to create outcomes that wouldn't be possible by you working alone. So in our view, in my view, it's never been more important to create these connections and enlarge what already is there with a team of people who can help you at this time. So people like your banks, your legal advisors, HR advisors, and your accountants and bookkeepers and so on, all together, by tapping into them, you can come up with a far better plan. So, I mean, at Davis Grant, our core purpose is to provide you all with the best all-encompassing service based on your particular needs, hence why we're running this webinar. So this should really just be the beginning of how we can work even better together. So take lots of notes, don't be shy about asking questions, and let's get into it. So during times of adversity, we're often forced to think a bit more outside the box, to reinvent the way we work or behave. And we see there's four main opportunities that we see for you to reinvent your business or to look at it slightly differently. The first of these is to innovate. The Oxford Dictionary defines innovation as the introduction of new things or ideas or ways of doing something. The second way to reinvent is to re-engineer. Definition of re-engineering is to change and improve the design of a product or a system. In other words, use what you've already got to produce something completely different. So one example of re-engineering, as we've heard, is, say, beer companies looking at what their plant could make during lockdowns and when the restrictions were in, and moving from producing beer to creating hand sanitizer. That's not quite the same as US residents asking if it was safe to drink the disinfectant to cure their coronavirus. Another example of re-engineering was when the Formula One teams took up the challenge originally and made ventilators. So reconsider how you can re-engineer things within your business. The third way to reinvent is to adapt or change the way that you deliver products or services. Adaptation is, you can think of as a process from a biological definition by which a species becomes fitted to its environment. It adapts. So in other words, we look at the environment we're in now, which is different to before, and how we can suit and change our businesses to adapt for that environment. Some examples for you of that are businesses adapting to work in the more virtual world by Zoom or Teams. This is an exact example of that. We might otherwise have put on a face-to-face seminar, but now doing webinars, or by businesses starting a click and collect option where they're pushing more product out in a different way or selling through websites that they never used to do. So of those four ways, we've looked at innovation, second was re-engineering, third was to adapt, and the fourth one we're calling widen your lane. What we mean by that is just to broaden the product or service offering that you have. For example, a cafe who broadens their offering from purely offering food and in the cabinet and coffee to include ready-made meals or boxed up cakes and treats, or even selling ingredients or ingredient bundles with recipes for making their signature dishes. So that's just widening what they do. So with four ideas in mind: innovation, re-engineering, adaptation, and widening or broadening what your offering is, what could you do with those in your business? How could you change and adapt? This is an element, a significant element of what business recovery planning is all about. But of course, it's about numbers as well. It's about the figures, and there's a natural order that you need to follow in order to reinvent your business. Some months ago, I spoke about business continuity planning earlier in the pandemic, and at that stage, one of the things I said was to put the oxygen mask on yourself first. Business recovery planning is no different. So what I'm really saying is that the business is there to serve you. It's not the other way around, and you shouldn't be a slave to that business. So step one in the more detailed numbers planning is to put your shareholder or owner hat on and define what it is that you want to get from that business. When that falls down to your own personal budget. Can you make savings in your personal spending to reduce the cash flow strain on the business? Now, no doubt, some of us, or you've made some savings during lockdown with all the restrictions that were in place and different spending patterns. Can you continue to do that afterwards, or when that is less restrictive, hopefully in the near future? Is your spending going to increase? How is that going to impact flowing back into your business? So to do a personal budget, the best way to do that is to use a template, so you don't miss any expenses. And an easy way to do that is to look through your bank statements and credit card statements, get them online if you don't have them posted anymore, to see what you typically spend in a month and where you can change things. But of course, you've got to be realistic with that. So because recent months were different, with different spending opportunities and more limited than before, so you're probably best to go back to more normal months several months ago to review what they were. And once you've done your personal budget, we can then build in to your revised business budget. And I'm sure many of you have done a business budget for the year. Well done for doing that. But this is likely to change significantly now and need to be monitored and adapted more often than before. What I've set out here is a process, but we recommend that you follow this from the bottom up. I just spoke about your personal income, but we want to do a different process in terms of starting at the end by looking at what extra cash your business is going to need for the year or period that you're doing. Now, it's important to start here because, you know, cash is king, and many businesses haven't found that they've got a shortfall, even with the various support that's going to be out there, or will have a shortfall going forward. So we need to plan for what the cash requirement of the business will be. If you like, the starting point needs to be the end point. This isn't designed to be technical accountancies here. Just want to show you how you can take control back by going through a high-level, step-by-step process. If you like, it's a high-level cash flow forecast focusing on just these several key areas. So remember, you're starting at the bottom of the list with your desired end result from the extra cash that you need to generate. So moving up from there, the next stage above is to look at what other cash movements there might be. Can you free up cash by pulling in the people that owe money to you quicker, reducing stock, being quicker at work in progress, or negotiating better terms with your suppliers? That would fit into this other cash box. Then next step up, need to think about any loans or capital that you've got to repay on any borrowings or finance. That's got to come into the equation. And then next step up, looking at what assets you might need to buy or even sell if they're obsolete. That could bring more cash back in. but you've got to start to plan for what the business needs to set it up for the future. And once you've looked at that bit, this is where we slot in the drawings that you need that tie in with your personal budget from the previous slide. And that's really the cash side of this business budget. But before that, we're now working up to the profitability within the business. So that is going to be the net profit after tax. We do actually have to make a provision for tax within here, because even though tax is paid sometime down the line, and there are spreading provisions in more than before, it's still going to be payable and it still needs to be provided for in the cash flow. But before that, you're going to have your net profit. And working back up, it's always important to have a careful look at the overheads that you've got. I'm sure many people have been looking at them really, really closely to see what savings can be made. That is a continual process, but it only has a finite possibility, because there is a base level that you can't get down below. And now we're working back up to the gross profit that you're going to generate from the sales that you make. That margin, you're going to have to be very realistic with the margin that you're making, which is changing as time progresses. So even though there might have been some stability in the past with the shrink back in the economy and changing competition, you really need to be realistic into the profit that you're going to make on your turnover. And then we're popping back up to look at sales, and that's tying back in to some of the opportunities and reinventing the business we were talking about earlier. So it's all about reviewing these numbers, and that's a very quick run through of how to look at a budget, possibly a different slant to what you might have thought of before, because in the past, sometimes it just tends to look at the sales as a starting point and flow that through and see what's left at the bottom. But what we're suggesting here is start with your requirement and work it back and see what you've got to actually achieve in the business in order to provide you with that cash at the bottom end. But you'll probably need to do a more, once you've got these key numbers, you're then going to have to break it down into a month-on-month basis, and then you'll be able to track that against your actual figures. Now, this is normal cash flow planning, just with a slightly different angle. Once you've got your monthly figures, it's important to compare actual to forecast. Sometimes this is done quarterly, but in times of more flex and change, it's important to do it more regularly than that. Now, for example, if you needed £500,000 turnover, that's 10,500 a week on 48 weeks a year. How are you recording what you're actually doing against your budget? How do you really know? A lot of businesses and business people tend to look at a folder with money that is due in compared to what's in the bank, and really just focus on the cash. But that is not going to really be sufficient nowadays if you want to really ramp up how you're going to recover your business or how you want to plan best for the future. Likewise, if you've got, if your cash collection terms, your debtor days are 30 days, for example, as your standard, then your debtors are taking longer than that, 51 days maybe, or whatever it is. How are you measuring what it is to what you want it to be? So what you should be doing within your measurements is to set up some key performance indicators. These are, I would suggest, no more than 5 of the most important indicators in your business. And this is just a little dashboard of showing just an example of different amounts: revenue, debtor days, and so on, a different scorecard. So you should really set those up and measure them and make sure your systems are in place to give you regular, accurate readings on these. Now, if you haven't set them up, we can help you do that. And also the technology nowadays out there with accounting programs and various other software really helps you to monitor all these key numbers in real time. So if you're not into that and you haven't set it up, again, speak to us and we can help you with what might be the most appropriate technology for your business. But the important thing is to think about those key indicators within your business. Don't make it more than 5, but really concentrate on them, because if they are key, they are key, and you need to be identifying and measuring them constantly. So once you've set up your high-level budget, it's time to look at the opportunities that exist to achieve that. So we would recommend on focusing again on no more than 5 key opportunities. So think of the ideas we spoke about earlier to reinvent your business, and around that at this stage. So the opportunities could be things like working in a more online way with your team or customers, or you might no longer need the same premises, or you might need to redefine the roles of people within your business. There could be new lines of revenue, or you could want to acquire another business from a competitor or somebody else to bolt on at the moment. So this is broader thinking for opportunities that are around, and thinking of perhaps using technology better within your business, or systems to improve your efficiency, or online communications. So within the plan, you've got to really think hard about those opportunities. Perhaps take time to brainstorm them all, put them all on sticky notes or scatter them on a piece of paper, get them all out there, get yourself in a real good brainstorming mode, get some clear time, and make sure that you kind of really think deeply about it and don't leave any stone unturned to identify those opportunities that are out there. And I'm sure many of us have been doing that at various times during the day, but it's the process and the writing down and identifying and really thinking through what those opportunities are, sometimes with other people as well. That's an important thing to be doing, so that you're really focused on what needs to be done. Of course, the flip side of opportunity are your vulnerabilities. So as well as looking at the 5 biggest opportunities, you want to be looking at the 5 biggest vulnerabilities in your business right now. So, could be things like poor cash flow, or a particular downturn in demand for your current products or services. It could be bad credit control, or you might be close to breaching some banking covenants. It depends on the business what they are, but writing them down and really being clear with them is going to help make this plan to overcome them, so that you can make sure that you've got the mindset to focus on those and overcome them. You've got to be brutally honest here, and assess them as they really are. A rosy plan at this stage is not going to pass muster. It's not going to get you through it. So, of course, we want to be confident as what can happen with the possibilities, but equally, you've got to be 100% realistic and look at the real issues that are going to be there for you in your business, to make sure that you confront them and plan through it. So you've got 5 opportunities, 5 biggest opportunities, 5 biggest vulnerabilities. And once you've been through that, we suggest you'd identify your 2 or 3 most critical challenges. So these are all linked, but they're different. So they might be like deciding to whether or not to sell or liquidate part of the business, or bringing in an online sales platform, different types of finance over the next few months. These are all challenges that you need to look at. And there's a way of looking at them and scoring them to find out which is the most critical for you. And it kind of comes out through something called a risk register. And you can score in different categories of risk. So the way to assess a risk is the little section on the right here, where we can look at the consequence of a risk and the likelihood of it happening. And then what you do is you see how significant or unlikely that is to happen on the consequences. And then the likelihood on the left, we're again looking at a range of how likely you think that risk is to happen. Then you basically follow it along the grid and see which is the most important. So obviously, if you've got a risk that is almost likely to happen and is extremely significant for your business, that's going to be in the red zone. And on the other scale of it, if it's a remote risk and the effect on the business is very small or is insignificant, obviously it's not going to be scoring highly. So I mean, it's pretty obvious, but it helps to see it in a different on a grid. So risks within the business depends on the size and scale of the business, what risks might be following you, but just want to run through different types of categories of risk that you might want to be considering as you go through this process. So and develop this risk register of things that you need to be thinking of within the business. So the first one we've got is about governance. So that's thinking about poor planning across the business, not having up-to-date policies, and poor discipline around the general day-to-day working of the business. If you need to be communicating various things across a larger body of people, that would fall into the governance section. Leadership, we're talking about risks to do with communicating and reporting and team morale. What are you as a leader got to do within these categories here? Looking at products and services, what are the risks around that if you don't adapt? Are you in a fast-moving industry where you've got to constantly reinvent things? Risks about lack of adapting or innovation, how is that going to fit in? Operational risks, you want to be considering risks about your suppliers and your supply chain, for example, or contracts and key customers. Marketing risks might look at, for example, not a particularly good return on your investment. You know, you're spending a lot on Google AdWords and you're not getting much back from it. How are you assessing that? Have you got a digital presence in the first place? Is that a risk that you're not fully engaged with that? Need to be thinking of that. On sales, an example would be, for example, e-commerce or online selling, poor training of a sales force, if you've got to adapt and resell them, or even, you know, overselling, over-promising in times where delivery is difficult. Those might be risks to do with sales. On finance, some of the things we've already been talking about, lack of sufficient cash flow. Does the business have enough capital to keep it going? Has it got just generally a poor finance structure? It's got overdrafts instead of loans, or the period of the loans is not what it should be. Bad credit control, poor management, just poor reporting, and lack of forecasting. Those would be financial risks. I mean, there's a lot really to think about here. HR, overspending on staff, poorly managed. If you've got some grievances going through, you've got issues to do with furloughing, you've got all kinds of stuff. and that's going to risk certain people and within your team. How does that fit in with your overall risk assessment? On admin, perhaps a lack of automation could be a risk within that. And within technology, how's the business dealing with technology? Is it really fully adapted? Have you got full use of software? Are you making the most of apps that are out there that help the business following through? So this is really quite a complex and difficult area perhaps to go through, and not all of those categories will apply to all businesses. But within this process, really, you have to look at those risks and see what is there for the business to deal with going forward. And some of these will play out over time. There's going to be a different time scale where these impact on the business. But really, it's best to think it all through and have a look at it and bring it into the plan. So once you've identified the risks, you need to pull everything together into a cohesive plan. And it's important in that to have goals, actions, and responsibilities, which we'll come on to in a minute. So the business recovery plan is far more detailed than a business plan you might have, in that you're getting right down into the detail for each department of the business. So the goals need to be SMART goals, all familiar with that, measurable, timely, and so on. And you need to make sure that it's assigned to the right person. And the goals and actions have got to be updated regularly through some kind of review process. And at this time, for these, we recommend that you have a monthly review at the moment for at least 6 months, and then probably change to a quarterly review after that. And really, that's the process we suggest we put yourselves through to navigate through these particularly turbulent times. As I've said, this is all really just good business sense and process anyway, and it's a good thing to start doing year on year moving forward. But let's take a closer look at how to pull all of this together in a complete package. So to recap on what we've been through, and depending on your circumstances, the package and the plan should include all these elements we've spoken about. So your personal budget, a risk register, a business recovery plan, your business forecast, and if you need to, an updated organization chart if you've got a team of people. Didn't mention that, but it's a logical, sensible addition. And if you're applying for finance within all this, look at the finance application itself. You may not need to do all of this work at the same time. For example, you might have sufficient cash flow now, so you don't need to apply for finance. Likewise, if you don't have a team, you don't have to do an organization chart. But what is important is that you establish what is right for you and what combination of these you need and who will do them. So let's dig into a plan, which is going to come in section by section. So the first part of the plan suggesting would be you start with an executive summary. So just a narrative, a very short narrative about what's happening in the business, what effects it's got, and really summarizing where you are in terms of what's happening, and a broad overview of what's needed in this executive summary, which really is often done at the end, not at the beginning. It's at the beginning of the plan, but you normally write it once it's all finished. And then coming on to bring in the finances. So we're looking here at what might be happening now in the current year, and then where you might want to be in 3 years' time, for example. Obviously, these figures are just an illustration. It will be your own ones in your plan. And looking at the actions that you need to overcome and bring that change or the risks into place and to what's relevant for that particular plan. And the right hand side is really giving an example of what is going to happen that might have that trigger. So here we're talking about just someone looking for their personal spending going up now from just over 4,000 to 5,000. A particular role for someone is going to be changing. They want to change their role. They want to work slightly less hours and less weeks a year. And this is what we're talking about at the beginning, looking at what we want what the business owner wants to be getting out of that. Doesn't necessarily have to be money. It's really about lifestyle as well, getting the work-life balance right. After that, starting to look at the key financial figures. These are more traditional things to look at, and it's just a summary of the profit and loss account where the business needs to be. So this is just bringing in those points on the bottom up slide. This is the turnover and normal traditional things that you'd measure in your management accounts. But we've got the figures broken down here, and then we would measure it quarterly against the actual figures to see what's going on. And then following through, this is ending up following that slide at the beginning about the bottom-up planning. This is just flowing through all those figures we're talking about after tax, and that's where the owner's drawings are coming in. This one needs to spend a bit more on assets. We're bringing in some more loans, and there's a few other movements because of stock and debtors and so on. And that is ending up with the net increase in cash in the business, which was the target that this particular business set. Now the next section building into this particular plan are the key performance indicators. So this is about, for this business, debtors, stock, margin, minimum sales per week. And this one's identified that it's key that they have board meetings monthly. KPIs, bringing in opportunities, 5 opportunities. And this is just really saying that this plan doesn't have to be expansive. It's not going to be many, many pages of work. It's a lot of work to get to it, but at the end we're ending up in a nice condensed way how you can present these and how you can monitor them over time. And then just adding in vulnerabilities and the most critical challenges that they've got. So that's where they would all get listed through. The next stage was looking at all of the risks within the business, and we would just list out all the different departments that were relevant, and start to build up the columns within this. So looking at the departments, looking at the risks within each stage of that, and then bringing in goals as to what the best way of dealing with those are, or the goals that you want to achieve within those risks. So take any of these, just take the top one, having proper governance and proper reporting timely across the board, and the goal is just to make sure that that is in place. And then we start to break the goals down into timeliness. So 90 days on, what should be done within that goal to mitigate that risk within 90 days, and building in the action plan as to who's going to do what and why and when. So we're starting, as it flows across the page, you can see that that detail comes in, and it's very clear who's doing what. Baz and Adam are going to be very busy, and there's dates when they've got to be doing things, so it makes it measurable, and you've got these goals and targets set down on a SWOT basis. And that's how the whole plan of the risk evaluation and what you're going to do about them builds up, and it's clear as to who's doing what. And this is just more of the same, just going through different elements of it. So if we look to the finance row, the biggest risk was that on this example is that there's cash flow to trade through the next 3 months, for example. And the objective and the goal within that was to have at least £50,000 of available cash flow at all times. That got broken down to a narrower goal within 90 days. And it was the way to achieve that was to have, in this example, an outsourced credit manager, regular porting on the debtor days, and a short-term overdraft extension. So that's how those particular risks were going to be managed. And then there's responsibilities for each individuals to be done by who and when, which all seems to make sense. So that's really what the overall plan looks like at the end of the day. And that really is the meat of the presentation over. So really, what would your next steps be? I hope you haven't been overwhelmed with too much technical detail here. I mean, my goal's been to share with you what business recovery planning is all about and how to do it and what it looks like at the end for you. So what are your next steps going to be? Doing nothing is really not an option. We're entering in a period when business is not normal, and doing what you've always done is unlikely to give you the same results that you've always had in the past. Remember, put that oxygen mask on yourself first. The more sustainable you can make your business right now for you, then the better it will be for everybody. You've got to make a plan to get through these challenging times and focus on what you can do as opposed to worrying about what might happen in the future. There's a lot of positives and there's a lot of opportunities out there still. We're here to help you, and we want to help. So this is what the help that we can offer you. So our recommended strategy is for you to complete a business recovery plan, and we've been receiving great feedback on how helpful this process is. So if you haven't done it yet, now is the time to do it, and it will form a great foundation from which to build your cash flow improvement strategy, and it'll also help with possible loan applications. So the options we've got here, I'll just go through with you. The first one is to meet with us so we can do it together. And we're suggesting it's going to be one session of maybe up to 4 hours, which is quite intense. So we often split that into two-hour sessions, and we'll send you in-depth pre-work to complete some of the sections and the things that we've gone through. So you've really got time to consider the impact the current situation has had on your business, on your departments, and so on. And we'll use that completed pre-work to guide us through the plan and set out the goals that you need to have for each department and for the business overall. So this ensures you've got a detailed and well thought out plan to give your business the best chance of recovery. The second option is to meet with us for that business recovery session, and from there we'll also prepare a detailed monthly updated cash flow forecast and put in an application for finance. That would be either to help you with a CBILS loan or other funding that you might need, either directly with your bank, or we've got an online platform that looks at hundreds of different finance suppliers outside of the banks that is very quick and gives quick turnaround on things. I would just say that at the moment, The CBILS funding is due to finish at the end of January, when they will be switching the system to something else. From speaking to banks and financiers, there is so much volume of applications going in. I'm already getting feedback that we've got to have stuff in the next couple of weeks if you want to cater to get things done and sorted by the end of January. This isn't necessarily because banks are slow, it's because they are overwhelmed. We've got the Christmas period coming up, and really now is the time to start putting in applications if you haven't. If you already have, is it enough? Do you want to replace a bounce back loan with a higher CBILS loan? All these things really you've got to think about now, whilst that money is still available. The next option, which I've got a second one and two, sorry about that. So the third option down there is to have a complimentary review. So we'll send you a business recovery action list to complete, which is a condensed version of the plan, and that kind of suits some of you that might already have a small business or one that doesn't require a comprehensive plan. So once you've done that, we'll have a quick 15-minute call to review it and talk about your next steps. The problem with this approach is that with everything else going on around you, you might not get to do that work because you might just push it to the end of the list. And the last one is that if you're not sure what the best way forward for you is, or you want to talk to us about how we can work together on anything, just a complimentary meeting to discuss your goals and current problems and challenges, and then we can agree on the best way that we can support you. So if you're going to need business funding, as I said, it's vital you prepare a cash flow, work out what that's going to be. The loan that you take out has to be repaid. So your business needs to generate enough profit to do that and convert it into the cash that's going to make the repayment. So you need to plan out how that's going to be done. We know it's difficult to commit to spending money right now. We've got different payment options available, so don't let cost be a barrier. Get in touch and we can work together and come to some arrangement that you can manage. But we do know ultimately the benefits that you get from doing this process will be far greater than our fee, than the time cost for you. And most importantly, it's all about helping you as quickly as possible and ensuring that we work with you to make a more resilient business, and helping you go through that process that is right for you, that enables you to navigate these turbulent times and come out the other side ready to be stronger and better. And that's it. I'm now going to go on to questions. I've got a couple already. Nick, if you're still around, have we got anything going on? Any questions come through?
Hi Neil, yes, I'm here. I just thank you very much for that session. Firstly, on behalf of all the attendees, I think I found it really informative, and there were a lot of practical tools to really get us thinking about how our businesses might be impacted and what help is available. I guess my question to you is it, and you did reference it when you were talking, that perhaps it might feel a little bit overwhelming for people to take in that information. So my first question is just kind of what your kind of just that on that next step, or what your advice to people is if they are just feeling that little bit overwhelmed about approaching this whole issue.
Yeah, that's a great point, Nick. And it can be overwhelming thinking about finances and thinking about things that might not be as great as you want them to be. I think the best thing to do is to make space to do this. Work is busy, life is busy. There's so many different pulls on our time nowadays, and things like this can often get put aside and left till it's too late. So my recommendation would be set aside half a day of your own clear time, maybe over the weekend, or just clear one evening when you've got some clear headspace, and go through the sections that we've been talking about, and just make the time to start thinking it through, and look at the risk areas, look at the opportunities, look at the things that you might have to do in your business, and start to put things in order. So my recommendation is just to start. Often when things are overwhelming, we don't know where to start. I don't really think it matters. Find a quick win is often a good way of doing. Pick through the things that we've spoken about today. Find the bit that you feel happiest about. Look at the opportunities that you think are out there for you. Get a bit of a feel-good factor, and then bounce off of that and start to go through the other things. Or I would say, call me, call us, and we'll make time to help you with it. But just start.
Yeah, I think that's a key message that I have in conversations with business owners, is always that having that their accountants is there to support them, or Davis Grant are there to support them, and we really do want people to call us and tell us about what's going on and what they need. If anyone does have any extra questions, please stick them in the Q&A. We do have a couple of questions on the same theme, Neil, that I'll put to you, which is the B word, Brexit, at the moment. So there is a question from an anonymous and also from Richard about how they should approach planning for the end of the transition period, which of course is next month, isn't it?
Yes. Well, it's a great question, and one on many people's minds. I think, unfortunately, it's still not 100% clear what's going to happen, which adds to the uncertainty. But I would look at that risk matrix, and we're talking really about, as well as the opportunities. I think people are more mindful of the risks to their business of things happening. If you've got logistics of moving stuff through customs, have a real deep thought about what you're going to have to do to overcome certain problems in your supply chain. If you're a virtual business or a service industry, that isn't going to have so much impact. But I would really look at it from that point of view. And again, in terms of preparing as much as you can, there's more and more coming out now. I think if we haven't got it, it's coming up very soon on our website, a Brexit section to help with that. And make sure you have applied for all the various clearances and registration numbers, EORI numbers, whatever it is that you might need to help on the customs side of things. In terms of the impact on general business, it's more of the same to my mind. We don't know what that impact's going to be. On top of the COVID impact, it makes things worse, but it kind of just adds to the things that we've been talking about. So
yeah, consider
Brexit in what we've been talking about today is just another layer. It's just another layer of what's out there at the moment.
Yeah, I guess the advice that you were talking about in terms of thinking about at the beginning of the session about innovation and widening your lane and diversification still holds true given that. And certainly that risk matrix seems like a really good tool to really focus you on. I guess if although we don't, it's frustrating, we don't necessarily know the details of the regulatory changes with Brexit. We can still anticipate the areas that we feel they might impact on. You reference, for example, supply chain.
Yeah, absolutely.
So I hope that answers.
Go through that risk matrix and look at how much effect it's going to have on the business of what you consider. Sometimes when you think about it, it's not as bad as you might have thought it was going to be, but just go through that process.
No, thank you very much, Neil.
In terms of time and finding time, there's something called an achievers matrix that's got 4 quadrants in. You might have seen this out there, and it helps segregate what is urgent and not important, and have a quadrant of waste. So if you look at what you can delegate or outsource, for example, within your time to create more time to look at things like this, and be disciplined about what's important but not urgent. So you've got to look at your time. If you're struggling with time to think about this, have a look at how you're spending your daily time, and see how you can change things around for yourself. I appreciate it's hard to do when you've got urgent and important work to do with, but sometimes they're not as you might think to be. So have a think about your daily time scale, how you're spending your time, and that might free up more time for you to actually do stuff.
Thank you very much, Neil. I'd just like to echo something that you said about, yes, we do. We are actively sending, I think I just had 2 Brexit updates, VAT being a big issue, come over my desk this morning. So please do watch the Davis Grant blog, and subscribe to our email newsletters, where we've really ramped up in the last couple of months the amount of content that we're putting out there, the amount of information that you can get. So if you're not receiving our email newsletters, please do subscribe at davisgrant.co.uk/subscribe, or get in contact with either myself or Neil, and we'll make sure that you're in the loop. And as soon as we get news, including the Chancellor's announcements yesterday, that should be hitting your inboxes very soon. So yeah, please do keep in touch, and reach out, give us a call or email, however you want, if you feel you need support.
Okay. Thanks. So just my parting thought for everybody is really, things might never go back to the way that they were. So we have to create the new normal. Thank you for making time to attend this. We appreciate your time. It's very valuable right now. And I hope that we've given you plenty of ideas to think about, and some clear options as to how you can do things and how we can support you. So coming back to it, make a simple plan today. Follow on from this, commit to at least 3 actions that you're going to take as a result of being here today. We've all been on webinars and seminars where you don't necessarily action things straight away. I find it really helps to do it now. So write them down, give each of them an owner and a completion date, and you'll start to address those things straight away. But you don't have to be alone. There's loads of support out there from us, and more to come, and others as well, and people are here to support you. So there we are. If you want to know more, there's our contact details. Thank you all for attending. Thank you, Nick, for facilitating, and please do complete the feedback form when we finish this show. That's it.
Thank you very much, Neil. Thank you everyone for attending.